respect. Now, let us come to the sixth step in the accounting process, the income statement. The income statement shows the net result of business operations. The result can be positive or negative. The result can be positive when I say it is the net profit, that is the excess of the incomes and gains over the expenses and the losses. If it is contrary to this, if the expenses are excess to the incomes, then it is a net loss. Now, if we are preparing the profit and loss account, then we say net profit or net loss. But if it is prepared in a statement form, that is called income statement, we call it net income. Now, similarly, we also have balance sheet. The liabilities are the claims on the business by the investors, the bankers, the creditors who finance the business. And these liabilities are taken on the left hand side of the balance sheet. Now, similarly, the profit made during the year is deducted from the capital that is written on the liability side of the balance sheet. If there is a loss from the income statement, that will be deducted from the capital of the balance sheet. In the balance sheet, we have capital, we have borrowings, we have creditors, and this is the source of finance for the business. And these people have claims over the assets of the company. Now, these assets are recorded on the right side of the balance sheet. Now, this balance sheet assets are categorized into fixed assets and current assets. Now, the investors and the lenders have claim over these short term and long term assets. Now, the total of the liabilities should be equal to the total of the assets. Why? The balance sheet should tally. Balance sheet should tally, which means the total of the liabilities should be equal to the total of the assets. If it is not tallied, that means we have committed some error somewhere, because the simple logic that it should be tallied is we cannot spend more than what we have in our pocket. That means what we have is the capital and the liabilities. Liabilities is the borrowing from the financial institutions, and the creditors. What we have is the finances raised in various forms. And what we spend is we spend for the procurement of the assets, plant, machinery, furniture, fixtures, and the materials, and so forth. Now, whatever amount that is left over is shown as cash balance. Now, after purchasing all these assets, some amount is left over, that is also shown on the asset side of the balance sheet, because cash also is the asset in the list of assets. So, our logic, we cannot spend more than what we have, is tallied. The balance sheet should tally. Now, we have seen the entire accounting process, how we record and how we post, how we make the trial balance, and how we prepare the income statement or profit and loss account, and how we prepare the balance sheet. Now, who are the people or the parties interested in the information related to accounting? The information relating to the profitability, the information relating to the financial position of the company. Now, we have shareholders. The capital is raised from the shareholders. These shareholders are the investors, and the investors always would like to maximize their wealth. They want to maximize their earnings. Now, they will understand how the profitability of the company is through the income statement. And not only that, how are the fundamentals in this company, like what are the assets, what are the liabilities, they would like to know. And in addition to the investors, we also have bankers. While lending the finances, while lending money to the company for business operations, they also look at the profitability and the worth of assets that this company possess. Now, as investors and bankers are looking at this view, we have another stakeholder, employee. Employees are concerned with their salaries. As the company's profitability increases, their salaries will be increased. And if the profitability goes down, and their bonuses, their payments may be affected. So therefore, they are concerned. And finally, it is the stock exchanges. Time to time, we have to supply